Good evening, everyone, and welcome to the Power of Passive Investing meetup. We have a great couple presenting for us tonight. It's Danny and Christine Belish. We're thrilled to have them with us. Before they going to take the floor, I'll let Matthew Aguina, my co-host, to introduce them.
Yeah. Welcome, everybody. Happy Wednesday evening, post 4th of July. Hope you all had a good holiday weekend. Really excited to host Danny and Christine. I think they have their own really cool story. I think just the fact of how we met and came together is a cool story in itself. So I'll give a quick introduction. I was recently introduced to Danny and Christine. We did a real estate investor hike meetup. So I partner with one of my partners on a deal I invested in Kentucky. We're active partners together, GPs. He put together a little hike for some of the local New Jersey real estate investors out in Fort Lee, kind of along the Palisade Parkway there. So it was a Saturday morning. We kind of all went out, didn't know, actually got a ride to the event from someone I just met for the first time. So it's pretty cool. We all kind of came together, did a little walk, and like throughout that walk, just got to get to know a few of the different people. And Dan and I spent a good amount of time talking about real estate, of course, being one of those things, and a few other things, basketball and small business and just life in general in New Jersey. And working in Manhattan, we both have that in common as well. So it's really cool how we all kind of like actually our paths have crossed. Since then, we've met up a couple times and chatted a few more times, and as networking goes, right, you never know where it's going to go from there. So just to give a little introduction, I'll leave most of it for you guys. I think you guys have a really cool background to share. So they have the Belish group. So they both had, I think what's really cool, and I want to make sure you guys cover this, is they both had corporate jobs, which I know is a common theme for a lot of us on the call, is kind of have the day jobs, but in real estate is kind of either a passion or, an additional, hopefully income or future income for a lot of us. So that's where both Danny and Christine started, as well as myself, and I'm still there. Danny still holds his job. And I think Christine's now went full-time in real estate, which is super exciting.
Awesome.
And part of their story they're going to share tonight, which I think a lot of us, a lot of us have read the inspirational stories about, where real estate could take you, right? And can it replace your full-time income and then some? So I think Danny and Christine were very, very strategic about how they went about this. They were leading, I like to call it leading with value. So they thought about, we have this skill set from our corporate jobs in marketing and communications. They had already, kind of interacted with a lot of general partners or kind of investment groups. And they're noticing that's just an area that they could help some of these folks improve upon, right? So they led by offering that. So I won't divulge too much, but that's one of the stories I hope to hear more about tonight. Like we mentioned earlier in kind of the pre-call discussion, they're New Jersey based as well. So that's pretty cool I know a lot of us, this group started kind of as a meetup in person, but now we're virtual. So I know a lot of us are in New Jersey. So they can share a lot of stories as well. They have investment properties, a big portfolio in Ohio, as well as some in New Jersey. And I think they're also partners in a couple other deals, so they can tell us about that as well. So that's just, I think, just a teaser, and they can divulge and take a lot of those paths and go further. But welcome, Danny and Christine. Thanks for joining us. Before you guys go into your story, we're going to do our little disclaimer here. So just for all of you on the phone, we just want to recognize today is purely educational. So any kind of investment experiences or nothing's meant to be taken as advice. Kind of do your own due diligence and consult with your own professionals. We don't have to do mute anymore as we've moved to a webinar format. So I think the one key thing for all of you to know is if you have a question, please enter it into the chat. And then at the end of Danny and Christine's kind of presentation, which will be about 30 minutes or so, they'll talk through their story. We'll do Q&A at the end. So we'll start with the ones in the chat, and we'll kind of work our way through it. So if you have a question that comes up, just enter it in the chat and we'll get to that. If there's something that's relevant for a specific time, maybe I'll just interject and throw that at you guys. And just once again, Alina and I's contact information here. Again, we're always happy to connect with everyone. I know hopefully big crowd tonight. And then for a lot of folks that view this afterwards, reach out to us. Happy to chat with folks and connect. So without further ado, Danny, Christine, yep, that's just the title page there. If you guys want to share your pages, go right ahead. And looking forward to hearing the story.
All right.
Thank you, Matt, for that introduction. Yeah, we're excited to have you present, Christine and Danny.
Thank you so much. I think you have to allow me to present, Alina.
Okay, that should do it.
Okay.
Sorry about that.
No, it's all good. All right, can everybody see my screen now?
Yep.
Perfect. All right. Well, first of all, thank you guys so much for the warm welcome. We're so happy to be here with everybody today. We're really excited to share our story. It honestly, Matt really hit the nail on the head. It's remarkable the way that we can connect with people in this industry and how much we can learn from everybody sharing their stories. So we've learned so much from everybody along our journey through them sharing their stories. And if there's anything that anybody can learn from anything that we share tonight, we are just here to lead with value. Matt hit the nail on the head again, and we'll get a little bit further into how we actually did that, how we transitioned from investing in small multifamily properties in New Jersey to growing our portfolio pretty exponentially after learning about real estate syndication. So just a quick little intro about us. My name is Christine Belish. This is my husband, Danny. We run a real estate syndication company called the Belish Team, and we grew our portfolio from 4 units in New Jersey to 926 units and 60 million worth of acquisitions. And just to put that in perspective, we had never raised any passive money from anybody before we became GPs, and we raised $3 million from passive investors in just 8 months. And a lot of that really was transitioning all of our experience and our expertise from our corporate advertising and marketing jobs in Manhattan into the real estate world through adding value to other experienced real estate syndication partners. Right now, we are actually managing a commercial net lease fund, and we are equity partners in over 84 million worth of real estate. That's over 1,000 multifamily units. And I think a lot of people throw out unit numbers and you have no idea what that means, right? And here we're talking about investing as LPs, and we're talking about investing as GPs too. So 415 units as LPs and 588 units as GPs. And to just put that in a little bit of perspective, we kind of wanted to start from where we're at right now and then kind of tell you a little bit about our story and how we got there. So as I had mentioned, we do have 4 units right now in New Jersey. 2 of them are in Asbury Park, New Jersey. That was our first major burr project that we did here that Danny's going to get a little bit more into. We also are house hacking 2 units in Garwood. But I'm sure you're much more interested in the bigger numbers that are up on the screen right now. So these are some examples of the other projects that we're involved in. The majority are in Ohio. We are involved in a project in Texas. Most of these shown here are multifamily value add deals, which I think the majority of people on this call or watching us probably are the most familiar with. But we're going to be talking about other forms of investing in syndication too, like development and net lease also.
So we weren't always involved in so many multifamily development, net lease, and commercial real estate investments. It really started the way that a lot of folks start in real estate, right? So we actually got our real estate licenses in New York and New Jersey, but then of course we wanted to start creating passive income just like everybody else, right? You know, the journey is to create enough passive income to take you out of your corporate job. And all we really knew is kind of what we were exposed to, you know, HGTV and everything else that you see from flipping houses or burring a project, if you're familiar with that. And that's exactly what we did. So we found the ugliest house on a really nice block. It was a 100-year-old duplex in Asbury Park. And we had these big bright eyes and these big dreams of being able to obviously do a full rehab on this project and extract a ton of value and be able to cash flow for many, many years to come. And our expectation going into it was kind of that we knew more than we actually did or had the resources that we needed to be ultimately successful. And after never having done this before, basically on paper, the way that it penciled out should have been about 4 months and $170K investment. And in reality, we ended up working with a nightmare contractor. We went 9 months into the project, over 50K over our investment budget. And not only did we go 50K over that budget, but we put our own blood, sweat, and tears into it. These pictures here are actually us. So you could see that we really kind of, we did anything and everything that we could to make it successful. But when you're inexperienced, it's hard to know what some of those hurdles and some of those obstacles are going to be. So by the end of the project, we ended up using the BRRRR method: buy, rehab, or buy, renovate, rent, refinance, and repeat. And it ended up being a pretty successful project, right? We increased our equity by 125%. We were able to cash out the majority of our cash that we had put into it. We still had about 85K left into it. And we get about an 11.5% annual return. But the reality, guys, is that this took so much effort on our behalf and 9 months to get to this point that we just kind of looked at each other and we said, is this really scalable?
So and I just want to jump in here quickly, because when we're talking, like, our plan was to leave our corporate jobs because we wanted to create a lifestyle that was more flexible and that provided us with more time freedom. And this project was the opposite of that. So for me to be leaving my corporate job, where I was a high income earner and I had worked my butt off for a long time and I got a steady salary and a paycheck, to, kind of do the opposite and like put it all on the line to take action and work on this project. It was a great learning experience, and I'm happy that we came out on the other side with like a positive story to tell. But we just really didn't see how we could scale this and truly create the passive income and the more like time freedom and flexibility that we were looking for in our life.
So it really wasn't until we attended a meetup just like this. It was in Manhattan pre-COVID, and we ended up going to this event thinking that it was about purchasing multifamily out of state. And we thought that it was more 2 to 4 units out of state. And we're all pretty much from New Jersey here. We know that it's super expensive. Taxes are high. It's not landlord friendly. So looking out of state seemed like a good way for us to be able to scale. But it was at this event that we actually learned that there was another way to invest in real estate, a much more passive way.
Yeah, so it was pretty crazy, and this really was the turning point, like, in our life and in our real estate investing career, was discovering syndication in 2020. And I'm pretty sure that the majority of people that are on this call are familiar with what syndication is, but just in case there are any newbies, we just wanted to take a second to explain that syndication is when investors pool their money and resources to purchase properties, and everybody shares in those profits that are generated from the properties. And there are 2 groups that are mainly involved in this type of investing. There's the general partners. Those are experienced real estate investors who handle all of the work that's involved with the deal. So they find the deal, they fund the deal, they manage the deal, they handle the legal, they raise money from passive investors. And then the other side of things are the limited partners. And those are the passive investors. And they don't have to do any work, right? So when we went to this meetup, our now partners were basically telling us about this, that we could invest money in real estate. We didn't have to do any of the work. We didn't have to do any of the heavy lifting. And we were coming off of this 9-month nightmare project. So for us, it kind of sounded like it was too good to be true. But we needed to do a lot of digging and due diligence to really educate ourselves more about what syndication was and how it worked. So let's talk about that a little bit. We met our partners and we wanted to spend some time getting to know them, right? So
and they did have available deals for us to look at. So these are some of the ways that we started to consider how to invest in their deals and how to really vet them as sponsors.
And so if there's anybody on this, meeting right now who is like learning about syndication for the first time, or who's maybe getting ready to invest passively for the first time, we just wanted to provide you with some questions that you should ask. These are some questions that we asked ourselves, and basically we spent time getting to know our partners, because there are a lot of people out there who are GPs, and I would rather invest with somebody that I know, like, and trust, right? You want to make sure that there's someone who's done this before, who has a track record of success, that they're transparent in what they're doing, that they're responsive and communicative, and we'll hit a lot more on that later. But also ask for references. I mean, we spoke with previous investors who invested with this GP team, and we also spoke with their attorneys. We really dug into the legal. We asked all the questions. You're probably the most annoying LPs ever. But when we learned about this, it kind of sparked a light bulb in our head, and we were like, if this really works the way that they're saying it does, then I want to learn more about it and I want to get more involved. So that's why we really took the time to educate ourselves. On the flip side of things, once you do actually vet the GP team and you figure out that like, and trust them, you actually need to evaluate the deal, and make sure that it meets your goals, right? So there's a bunch of different types of syndication deals that you can get involved with all different types of structures. And you want to make sure that you're happy with the returns that are being offered and the timeline that's related to the deal. Also making sure that the underwriting is conservative. You want to look for somebody who's under-promising and over-delivering, right? I don't want somebody who's going to be inflating the numbers to just make it look good and doesn't really care about the performance of the deal. And the other thing is, does the risk match the reward, right? So if you are going to be delaying your gratification for investing in a deal, you just want to make sure that the payoff in the end is really going to be worth it. And to take that a step further, I know we had mentioned, evaluating the deal, but there's a couple of other things to consider also. And we had mentioned this earlier as well, that, I think most people are familiar with multifamily value add deals. Probably also it's pretty self-explanatory what development deals are as well. I think something that we were a little bit less familiar with when we were first getting involved in syndication were net lease opportunities. But especially with the volatile market right now that we're all experiencing, we're looking for something that's a little bit more reliable and predictable cash flow wise, with less variables, since everything seems to be on fire in the world right now. So that's actually the reason why we are, pivoting into the net lease space, and why we are adding a bunch of these properties to our portfolio right now.
And just to pause and explain what net lease is for any of you guys who aren't familiar, it's really when you buy the building and structure of a retail location with tenants like Dollar General or Dollar Tree, CVS, Walgreens, Chipotle, Starbucks, AutoZone, Firestone, Bank of America, or Chase. It's these often large, very well-known brands. And what they do is they have these long-term leases with built-in rent increases and corporate guarantees. And they also cover a lot of the expenses on top of paying you rent. So what we wanted to do by showing this matrix here is really show you how you can evaluate different asset classes that may come in a syndication deal. And, to getting back to the point of our story, when we were hearing from these guys about the deals that they were bringing to market, the returns that they were talking about were oftentimes better than the returns that we got from breaking our backs on our nightmare project in Asbury Park. So at first, we kind of really questioned this and thought about, is this real? Like, is this too good to be true? And that's kind of how we went through this entire long vetting process. So essentially, we went through that vetting process and everything seemed to check out. And we talked to their attorney, we talked to their investors, we looked at their markets and how they evaluate them, their track record, their strategies. And it checked all of the boxes. So we actually decided to invest passively in 2 of their deals. And what happened, we started to see our passive income checks come in the mail. And we looked at each other and we were like, holy crap, this actually works. This is something that is totally viable. I'm not really sure why I never heard of it before, but I'm not complaining at this point. But this was really that kind of light bulb going off moment where we said, we need to become these guys, right? And that is the way that we're going to both be able to leave our corporate jobs and live that flexible, high life that we were looking for. So a lot of our motto in life and in our business careers and now in real estate is to kind of go to the most successful people that we could possibly find and try to make best friends with them and ride their coattails to success. You can ask any of my bosses in the past, that's how we do things, but there's a way about going, a way to go about doing that is genuine and that adds real value to them.
And I think something that I always, think of when we're talking about how we initially got started in syndication is a conversation that we actually had with Kenny. And we were kind of talking about, we spent all this time on Bigger Pockets. We read all these books. We listened to all these podcasts. We did all this research just like everybody else. And I think the thing that we kept coming back to was, okay, we're going to burr a bunch of small multifamilies, and then we're going to sell that whole portfolio, and then we'll level up into like a 48 unit, and then that's how we'll get involved in bigger deals. And I think that was the only education that we had received up until that point. And he just basically said to us, you don't have to start small. You don't have to do that. And I think that that's something that we've also kind of learned in our corporate career as well, which is you don't have to learn everything the hard way. And we kind of did learn things a little bit the hard way because we worked on our Asbury project. But I think meeting these guys really allowed us to scale up so much faster. So I just think that, it really was life-changing that we had the opportunity to meet them, get to know them the way that we did, and the way that we also turned it around into actually partnering with them on the GP side of things eventually too.
So really, by acting as a limited partner and investing with them passively, we did learn a ton about syndication and how it works. But how are we going to really get these guys to pay attention to us and partner with us when they had $500 million worth of assets under management, right? And we didn't have any syndication experience whatsoever. But what did we know? We knew sales, we knew marketing, we knew branding, we knew investor relations. This is what we were experts at. And to Matt's point earlier, we go to a lot of meetups and we attend a lot of meetups just as, as guests or people who want to participate. And what I really noticed was there were a lot of syndicators out there that were incredible at what they were good at, which oftentimes were finding deals or underwriting deals or operating deals, but not a lot of them were good at creating a brand, creating marketing, getting new investors in, getting new brokers to pay attention to them. So that's where we sort of took it upon ourselves to evaluate their entire investor-facing business, their entire consumer and broker-facing business. And we really took it upon ourselves to write them an entire new sales and marketing strategy and investor relations guidebook that they could then use. We asked them for an hour of their time. We presented them an entire PowerPoint presentation of how they could make their business more effective and more efficient. And we basically told them that we would execute it on their behalf in exchange for mentorship and an opportunity to partner in the future.
And I just want to jump in there quickly because I think the more that we are all involved in these networking events and, the more that we all get in front of, people that we might aspire to be like one day, we've had so many conversations with people that are, trying to find a mentor and looking for a mentor and want somebody to learn from. And I hate to say this, but the harsh reality is the people that you want to mentor you are busy. They are successful and they are busy and their time is worth a lot of money. So we kind of recognize that. And I think, just to drive the point home further that Danny was making, we wanted to find a way to get them to pay attention to us without us just being out there asking, just asking for something, be our mentor. We wanted to provide them with something in exchange for that. And in the hopes that maybe they would take notice of us, and want to work with us one day.
And just to be clear, we did this with several other syndicators too, that we thought that we wanted to, that we aspired to be, right? That we looked up to. So we probably did this with 3 or 4 syndicators and spent countless hours trying to improve their business just in the hopes of being recognized. But what we thought might be helpful here too is to share with you guys some of that insight that we gave to them to be helpful with you and your business when you are either creating your brand or your marketing or your sales. And just to start here, one thing that we really had to teach them was that marketing and sales are two completely different things, right? Marketing is all about really the top of the funnel. I don't know how many of you guys are familiar with the marketing funnel. I know Larry on here is, because he comes from the same world that we do. But these are sort of the steps in the marketing funnel, from creating awareness to consideration, conversion of that target, then building loyalty with them, and then advocacy, where they become a referral on your behalf. So this is kind of that marketing funnel, and sales is what really takes place in that conversion territory, right? It's not just about doing podcasts. It's not just about, doing all of this social marketing or other types of mediums. It's also about having one-on-one specific conversations and asking for that ultimate sale that's really going to convert people.
I wanted to highlight something you guys just said, because I think it's really needs to be overstated. Is you guys came up with this awesome plan. I'm sure you put all your effort in, and you kind of put yourself out there to some of those syndicators, and it just wasn't. I think Dan shared with me there were stories that you guys did some work and it wasn't reciprocated, and that could be, for a lot of people, that might just be the end, right? But folks could easily kind of give up at that point, right? And say, I'm spending a lot of time, I'm not getting anything out of this, they're too busy for me. But you guys kept at it. So I think that's, again, a huge story for all of us to kind of take home. You guys had a really good plan and you stuck to that plan. So I really appreciate that. You guys shared that.
Yeah, Matt, I think to your point, essentially, when you go in, and Christine and Danny, feel free to confirm, you have to go in with absolutely no expectations of getting something back. You're providing value to someone who's achieved a lot more than you, and you're just there to learn from them, like I said, to replicate their experience, and hopefully be their shadow to see what can be achieved and learn from them by being around them.
Absolutely.
I think it's also that, just to Christine's point, these people are really busy, right? They are out there trying to make friends with a lot of people that would benefit them. So a lot of it is building a friendship, right? And sometimes you have to build a new friendship through, give and take, and you have to know when to give and then also when to ask if you can take, So I think in this circumstance, we knew that we had to give so that in the end it could come full circle.
Yeah, and just to put things in perspective, it was 9 months that we spent getting to know them before we passively invested with them for the first time. Then we ended up investing with them passively 2 times. But it also, during this whole year, we spent a year of consulting on their business for free before we asked for it. So we literally gave them money, we invested with them, then we also invested our time. And then basically when the year mark basically came around, we were in the middle of presenting something to them, which we'll get to next. But at the end of that conversation, we had built such a good friendship at that point, to Danny's point. And we were also so pleasantly surprised at how humble and accepting they were, and how much respect they showed us and our expertise. Because I think that that's another thing to really mention. Some people don't have the perspective or the self-reflection to realize that they're not good at everything. We knew that we were not experts at syndication, but we do know that we're experts at marketing, and they recognized that, and it benefited them in their business in the long run. But another thing that I just wanted to mention, as it relates to the sales and marketing piece, is really where it all starts is branding, right? And I think that this is something that Danny and I have realized in talking to many, many, many syndicators. And this is not only related to syndicators. This is also related to any business. If you're selling a product or you run a small business, whatever it is, before you even start talking about sales and marketing, first you need to define your brand. Okay. And it's a lot harder than you might realize it is, because you need to do some soul searching and you need to ask yourself some tough questions. And some of the questions that you ask yourself are who am I and what do I have to offer? And then you also need to think about who your audience is and who you're trying to serve. What do they need from you? And the purpose of branding is really to differentiate yourself from your competition, to highlight what makes you unique. And again, there's a million people out there that might do what you do. So why should somebody give you their business over somebody else? And I think another thing too, just to drive these points home, the importance of branding, are these stats that you can see at the bottom that really back up exactly what we're talking about, right? 86% of consumers say that authenticity is a key factor in deciding which brand they like or support. So the more that you can stay consistent in your branding, the better it's going to be. If people feel like one day you're on this side of the fence and the other day you're on this side of the fence and you're just kind of flip-flopping all over the place, you're not really being authentic or genuine in the way that you're communicating with people. 81% of people say that they need to trust the brand that they buy from. And we can change this into investors too, right? You can believe that if somebody is going to be handing over $50,000 or more to you, that they need to trust you. So I think that just providing our partners with this perspective and laying it out in a way where we provided them with action items to help, define their brands, to define their marketing strategy, and then to define their sales tactics to help move people down that funnel that we had just showed. They really appreciated that, and they really saw the value in that. And for me, so when I started in my corporate career in Manhattan, my first job was in customer service at like a SaaS company, basically a tech company. So investor relations, customer service is near and dear to my heart. Danny and I also, again, we come from the sales and marketing background. So everything that we have done in our career is servicing clients and making sure that they're taken care of and happy. So another piece to the puzzle where we added value to our partners was we actually established a standard operating procedures for communication and customer service, and we helped them hire a full-time investor relations manager. Like, we literally wrote the job description. We told them what the standard should be, what this person's job should be, and how they should communicate with investors. And part of the reason why we were able to provide that feedback was because we had invested with them passively ourselves, right? So we knew what they were doing great. We knew what they could work on. And also, again, our corporate experience kind of helped lead to the recommendations that we had made for them on that front.
Yeah, and if you just look at all of these best practices, take note of them. And obviously we can send this presentation around too, but when you guys are dealing with investors and customers, all of these points are extremely important, and you can't leave any of them out when you're speaking to investors or when you're dealing with them, especially to Christine's point. If these are high value investors that are investing $25, $50, $100, $250,000 with you, they need to become everything that they are, and they are the lifeblood of your business. So just to fast forward a little bit, after, like Christine said, we had consulted with them for an entire year before ever asking for anything, but we got to that point where we felt really comfortable, where we could actually come in with them as a partner on one of their deals. When we asked, they immediately said yes. And, one of the roles and responsibilities of being a general partner in a syndication is to help raise capital or equity from passive investors for these deals. So, we ended up raising over $3 million from passive investors in about 8 months. And we quickly realized that, this was kind of one of our superpowers in a way, and it came from our background. And we wanted to share with you guys some of the ways that we did it. Everything has to do with branding and marketing, like we were talking about, right? This is where you're building credibility, where you're building trust, where you're building associations between your brand and what you want your brand to stand for. And for us, oftentimes that is, trust, credibility, transparency, fun. These are the types of things that we want you to think of when you see the Belish team in our branding.
And just to be clear, we had started doing our branding and our marketing before we ever started raising money for anything. So like, we had our website, we had our Instagram, we were sharing updates on our projects, we were educating people, free education about real estate and everything that we were going through. We were sharing our experience and being transparent. So when it came time for us to actually, ask people if they wanted to invest in a deal with us, even people that we didn't know that well before, we had already built an association with and a level of trust and credibility through our consistency, through social media, email, and all the rest.
So just to go through some of these others. So friendship for us is some of the utmost importance, right? So we actually want to create long-term relationships with our investors. In the most ideal world, these people become our friends. We have dinners and lunches with them, and go on vacation with them, and they invest with us for 20, 30, 50 years. And that is the most important thing to us in all of this, is really to that relationship-based approach. Transparency is so key. So not only are you delivering all of the great and positive information, but you're delivering the negative information too, and you're doing it in a way that is thoughtful and really open. The importance of one-on-one meetings, I can't stress enough. So when a lot of people are looking to raise capital, a lot of what they do is they go to social media, right? They create a website, right? They do all of these, inbound marketing approaches. But what's so important and what we've seen that's led to the success that we've had are these one-on-one individual meetings. This is where you actually create a relationship with someone and you learn more about what their goals are and what their intentions are. And they see that you are putting and investing the time into them the way that they are in you. And then there's something that we created kind of called the perfect pitch. And it's sort of a four-pronged approach where all four of these parts are important. And it's the you, the me, the it, and the ask, right? So the you is when you're really getting to know somebody, right? You're getting to know what their investment goals are. That's one side of it. But even more so, you're understanding who they are as a person. Where do they live? What, do they have any kids? Do they have a dog? What's their birthday? What do they like to celebrate? What hobbies do they have that you guys can find commonalities in? Then there's the me part, right? That's your side of it, where you're helping to show somebody that you can be a people person. You are trustworthy and credible, and you're building that rapport with them. The it is the actual product, or in this case, the deal. You have to know everything about that deal inside and out and upside and down so that they know that you have all of the information and all of the answers. If you don't have an answer, it's okay to tell them, hey, I don't have that exact answer, but I will get back to you, and make sure you get back to them very quickly. And then the ask. A lot of people forget about the ask, right? They think that those three first things are going to just settle it and that's going to be it. The ask is actually what is the most important out of all four of these. You have to directly ask people if they want to participate. Are they in this deal? Are they ready to invest? And this is what actually moves the needle more often than not.
And the one thing that I just want to jump in and also stress that we haven't really mentioned yet is follow-up is the most important. Okay. And so I don't know how many people on here are aspiring syndicators or people that, are in sales or marketing, but it's not enough to have one conversation with somebody in most cases and think that you're going to convert somebody on the first conversation, especially if you don't really know that person very well, right? So it's about getting to know that person, helping them to get to know you, but staying in touch with them over time. And even if they don't decide that they're going to commit in the first conversation that you have, you need to not get discouraged, right? And it's not always about putting it in somebody's face either. Every conversation that we're having with people is not, hey, are you ready to invest in our deal now? Hey, are you ready to invest in our deal now? Like, it'll naturally come up in conversation also. The more that you're building that authentic relationship with somebody, the easier that it is to genuinely talk about it, because you'll realize too that people want to know what you're up to. They're going to ask you that naturally, and it's easier to bring that up in conversation too if you're genuinely staying in touch. And that's basically it. I just wanted to give you guys, also leave you with like the main takeaways from that we hope that everybody got from our little talk this evening. So the first is take action. And of course, lead with value, right? I feel like we really drove that point home. Partnering to scale has made all the difference in the world in our business, and also to lean into your strengths. Like, you might be looking at syndication kind of like we were and feeling like you didn't really have that much experience in syndication, but there are plenty of other things that you are good at where you can add value. So you just really need to, ask yourself what you're good at and figure out a way that you can add value to somebody else's business to scale. And then if you do want to get in contact with us, this is our contact information here.
Yeah, we're super open. We are transparent. We like to make friends. We like to talk about real estate and other things. And if you guys are local to New Jersey and you want to grab a drink, you want to grab lunch, dinner, coffee, we're all about it. We also started a networking event off of the hike that Matt was talking about. It's called Win Wealth Investor Network. We have a Facebook group. We have another hike coming up on July 17th at 9 o'clock at the Eagle Rock
Reservation in West Orange.
So check it out. We have a great group, but really appreciate you guys for listening, and hit us with your questions.
Yeah, hit us.
Guys, this was awesome. Thank you so much. And I happen to know both places where you had hike, and the next one you're having. Both excellent places, have amazing views. You're going to enjoy it. Unfortunately, I have an investor event that I have to attend on the 17th, so can't join you, but looking forward to joining you guys in the future for your hike. Sounds amazing. We do have a few questions in the chat, so let me start. Actually, Danny, Christine, can you see the questions, or would you like me to read them?
Why don't we stop sharing?
Yeah, I can read them to you guys just to facilitate the.
Go for it.
Yeah, just
start with Leonard. Yeah, I think he was first.
Yep. All right. So Leonard had a question a little bit earlier. He's asking, what are your thoughts on, for someone that's brand new, trying to start and buy a multifamily property, or trying to start something smaller like a duplex? So kind of like you guys, that decision earlier on, right? Like you made a decision earlier on to start with the duplex. He's asking, kind of looking back, maybe perhaps, what are your thoughts on that now?
Yeah, it's, hindsight is always 2020, but I think if it wasn't for that duplex project, we wouldn't have had the perspective that we had to go bigger. And I do think, while we say, you can scale much quicker than the average person thinks, you're going to want to do it with partners, right? You're not going to want to just venture into a 50-unit multifamily after not having ever invested in real estate before. I would not recommend that. You really could lose your shirt in a lot of these situations if you're not doing so with the proper team in place. And that includes partners that are experienced. So what I would say is, if you have the opportunity to either partner with people who have experience in that, then you can do it as an active person and understand what your role is there. I would say more often than not, there's 3 roles when it comes to large multifamily or syndication. There's finding the deal, which is acquisitions, broker relationships, underwriting. There's funding the deal, so that's raising capital to help, pay for the down payment, the closing costs, renovations, reserves. And then there's operating the deal. So if you have property management experience or asset management experience, and you could fit one or more of those roles, that's where you could go. Or you can invest in syndication like we did. And we learned a ton through doing that, with monthly property management reports, on exclusive access to people who have, anywhere between $250 to $500 million in assets under management. Or I would buy a duplex and go small, understand that space, and then maybe you can quickly scale up from there.
Yeah, I think this is a classic question. I have a brief story of my own to share on this, and it's very similar to you guys as well. I just didn't know, like, entering the real estate investment world, I knew I wanted to own property, so I just looked at what I could afford, right? One of the outcomes, and even hindsight, again, like you guys said, well, maybe you could have scaled faster. I think one of the outcomes of that experience is now it gave me a ton more credibility kind of in the real estate conversations I was having, that, hey, I took action. I know kind of some of the pain points that come along with owning a property. You kind of like know the pieces of the puzzle a bit more that you're living in, right? Like, and up to that point, I had spent like almost 2 years of education, networking. But like in the first 6 months of owning that property, I learned, 5x what I learned in that 2 years. So maybe like, it's almost, I looked at it as and thankfully, it turned out okay. But like, even if it didn't turn out okay, I would have considered that kind of like a payment for education and credibility. So
Absolutely.
It was a payment method. It was a payment for education, essentially. That's what it comes down to.
I got paid back, but yes.
And I was just going to say that. So like what we, say to a lot of our investors. So, obviously we have some investors that are totally passive and want nothing to do with real estate investing, but then know that they should be investing in real estate. And those are some of, the CEOs and
doctors and lawyers and attorneys.
But we also have a lot of aspiring real estate investors who it's like almost getting paid to be educated. We like to say it's like the opposite of college, right? So you're actually getting paid to participate in these large deals and understand so much more about what it takes to take them down, acquire them, and operate them.
So the only thing that I would say as it relates to the option of investing as an LP in a larger deal is that if you're doing that, but you want to be active eventually, you just want to make sure that you're investing with somebody who you know is going to give you the time of day, right? And not every sponsor, not every general partner is going to be able to give you the time of day. So you're going to want to have that conversation up front when you're vetting them to see that they're going to be available to you to answer your questions and to learn from.
Great point.
Thanks.
Awesome. So next question coming from Larry is, this is more around like the investor conversations and capital raising. How did you guys overcome the often unspoken objection, such as how do you convince your professional network, marketers from your corporate job, for example, taking you guys as an example, how did you convince your colleagues and former colleagues that you have expertise in multifamily, right? So like, what do you, you're in the trenches with us here, on the desk in Manhattan, and what do you know about real estate? So how did you build that credibility with them?
So we thought that that was going to be by far the biggest barrier to entry. And that is the reason why we did not just say, like, go out there and decide that we were going to GP on our own deal by ourselves. That's the reason why, to Danny's point, we found these guys that have way more experience than us, who have more than a decade of experience and over $500 million worth of assets under management currently. So when we're talking about credibility, oftentimes, like, yes, we are transparent and we build the relationships with our investors, but we are leaning on our partners' credibility. And our partners are also available to have conversations with any investors if need be. But in all honesty, only 2 investors out of our more than 70 investors at this time have even taken us up on actually speaking with one of our partners. So,
well, so to answer your question, Larry, which I think is, when you're still in a corporate job, how do you approach your colleagues with investment opportunities that have nothing to do with your current job, right? So I think that is totally an obstacle. I think for us, a couple of things. Number one is we had to start with select colleagues and select people that were in our network, right? Like, that's just the fact of the matter. For us, we were lucky enough to have the 2 of us, and we made a conscious decision for Christine to leave her corporate job and for me to stay in my corporate job for our, financial support reasons and security reasons. So we knew at that point that we could approach her entire network now, but only close friends and colleagues of mine in the business who I had to make a decision if I could have that conversation with or not. What I have started to do is, as I get closer and closer to, the light at the end of the tunnel, which is leaving my corporate job, frankly, I've cared less and less about people knowing whether I'm involved in real estate or not, because eventually all of those people are going to know. So I think you just have to understand where you are on your journey and be selective about the folks that you want to bring into that circle. And I think a lot of the folks that we did bring into the circle have invested with us. So they understand that I have a corporate job, but they understand that my future is somewhere else, and they still see the opportunity in what we're doing.
And then, Danny, to that point, how do you see your future? Do you think you're going to stay in your corporate job for much longer?
Not a chance, Alina. The second that I can get out of there, I'm out of there. No, I don't want to. Listen, my advertising career has been absolutely incredible. And I've met so many great people through it. I just think that people evolve, and as cool as New York City corporate advertising has been for the last 15 years, I have to look at that next chapter of my life. I have to look at Christine and I as a family and what we want for our lives. And it doesn't include 40 to 80 hours a week in a corporate job, and learning that there are opportunities outside of that and that we could take control of our own destiny has been the most rewarding and eye-opening experience that I can't wait to jump into even further.
Perfect. I think next question from Mark is timely. Matthew, you want to read that?
Yeah, this is a good one. I'm sure all of us, especially now, like in this post-COVID world, like it feels like more and more of us are balancing a lot of different things, right? So Mark's question is a good one around time management. How do you guys manage like family? There's a question here. Do you have children? I know the answer, but I'll let you guys answer it. How do you balance like family and like Danny's corporate job and like all the other things you guys have done? How do you balance all of that, right? And like keep the ball rolling and like stay sane, right? So like how do you guys do that?
It really varies week to week. Let's be honest. I think entrepreneurship is a roller coaster. Like there are some weeks where you feel like you're at the top of the world and you're crushing it and you're killing it. And then there are some weeks where you're like, what the hell did I get myself into? Why did I do this? Why did I leave my stability? I think that we don't balance everything that well. We genuinely are best friends though. And I think that to have my best friend as my partner in business and in life does make things more fun than it would otherwise. I think that we also, even before we got married, we have an understanding with each other that we're going to give this life everything that we have. And to us right now, we feel like the best path to our future as quickly as possible is doing what we're doing right now. So we are in a situation where we're sacrificing, but we view it as if we can sacrifice for 5 years, like to the level that we are right now, it's going to give us a beautiful rest of our life. And that's not to say that we don't take time to enjoy ourselves now too. Like last year we did travel a bunch. This year we haven't as much because we've been a lot more active in the deals that we're working on right now, and we're very committed to that. So we haven't had as much time to travel, but working from home in this post-COVID or still COVID world, we're lucky that Danny has basically still been working remotely. He only has to go into the office 1 day a week. So even though he's juggling his meetings for his full-time job with everything that we have going on in our business, we're able to like pop out and take a bike ride or take our dog for a walk in the middle of the day. And that's not something that we ever would have been able to do before COVID. We also don't have to deal with him commuting like 2 hours each way every day. That gives us like 4 hours back of every single day. So I think we're very fortunate. I think I hate to say this, but COVID has kind of been a positive thing for us personally. I don't know that our business would be in the position that it is right now if there wasn't COVID, because he's been able to spend so much more time. And I think on the flip side too, again, it's the two of us. And truly, like, I know that I can count on him, and I'll let him say this, but I'm going to say it. And he knows that he can count on me, and it's not all on one of our shoulders. And I think that on the day when I'm having a really hard day, I can fall back on somebody who I know is going to pick up the slack. And we don't have kids. We don't have kids right now, and this is partially why.
You still lead very, very busy life, so that's definitely important. And Christine, like you said, you guys are not perfect. None of us are perfect, but you're managing, you're trying, I'm sure you're changing things around each and every day and improving and making it happen. So that's
also, when you make these types of sacrifices, you never know where you're going to be 6 months or a year or 2 years from now. It really is one of those situations where if you would have told me that we are equity partners in 1,000 units and $80 million worth of real estate 2 years ago, I definitely would have said you're crazy. I would have been in my job. She would have been in her job. And, but this is how things go when you really dedicate yourself, when you really make these sacrifices, when you put your all into it, this is what can happen. And like, the fact of the matter is, this is hard. This is really hard, right? And you really have to understand that and do it anyway.
Yeah, we've got a lot more questions for you. Let's try to get through them in the next 10 minutes. I do want to tell, Susan is asking what current opportunities you have. Folks, we typically don't discuss any active deals in a meeting, but Christine's and Danny information is in front of you. Feel free to reach out to them directly and discuss anything that they currently have or will have in the pipeline in the future. Matt, please continue with the rest of the questions.
Yeah, I know. Just want to be, I think some of these questions are, or at least two of them feel similar and around kind of like starting up your company, or at least one of them's like, what steps you guys take to create your syndication company? So from the moment you guys said you wanted to get involved, how did you what were the steps you took to create that company?
Well, I think it's a little bit twofold. Again, because we are partnering with people who have done this so many times before, we haven't needed to start from scratch. And that definitely gave us a big leg up. We are able to use a lot of the systems and the tools that our partners already pay for and already have experience using. We are not having to pay for all of these things that can be extremely expensive all on our own. So we are definitely leveraging a lot of the software, a lot of the tools, et cetera, that our partners have for now. As far as, creating a website and starting our Instagram and stuff like that, we had that set up before we knew that we were even going to be doing syndication. And it kind of just evolved over time, the messaging that we had on there.
And that goes back to what Christine was talking earlier about branding and those questions that you need to ask yourself at the very beginning. So I think that there's two parts to this question. There's more of the, how do I create a brand? Yeah. And then there's like some of the legal and some of the structure and some of those things. And we have an SEC attorney and we have an attorney that creates our operating agreements and, and all of our tech that we now use, we had to set up from scratch, whether it's everything from MailChimp and Syndication Pro and all of these systems that you have to put in place. But don't think you have to have all of that right at the beginning. It'll all come in time. You'll all know how it all sort of fits together.
Yeah. And we'll make this the very last one. Kate's asking a question, which I think is a good one and on the mind of a lot of folks often is suggestions or tips for folks who are interested in investing in syndications as an LP, but is not yet accredited. So qualifies as sophisticated, but not yet an accredited investor. Your guys' quick thoughts on that one.
Yeah, so I think that there is a very common misconception that all syndication deals are only open to accredited individuals, and that's not the case. So our partners are only involved in 506B syndication opportunities, which, just to answer that quickly, means that it's open to both accredited and sophisticated individuals. And sophisticated doesn't have any sort of net worth or income requirement. It just means that you're financially savvy enough and literate enough to understand the investment that, and the risk that you're taking by participating. So there are definitely sponsors out there that offer opportunities that are open to non-accredited individuals. We also are one of them. So you just need to network. Basically, I would say keep networking and you will find sponsors and general partnership teams that offer these types of opportunities that you can participate in.
Yeah.
Matt, there's one more question from Susan that you skipped. Do you want me to read it or do you see it?
Oh, I'm sorry. Yes. Yeah, I see it here. Thanks, Susan. Specific question on what advice would you guys have as an owner of property, whether it be multifamily, single family, or land, for someone that's getting ready to retire? My own 2 cents is keep it.
Well, it depends. It depends.
Yes,
what your goals are, right? Are you looking to cash flow to help you in your retirement so that you have income in retirement? Are you looking to be rid of the responsibility of having it? Would you like to sell it and use all of those proceeds and turn it around and invest it in a deal that could, give you more steady cash flow that you don't have to deal with and maybe some tax benefits?
I would say sell it, but use seller financing to sell it. So then you basically get the best of both worlds. So you get that residual income, but you don't have any of the responsibilities associated.
I think there are a lot of options. What I would suggest is shoot me an email and we can talk about your specific circumstance and I can hopefully lend lend a hand or lend some advice of what you could or should do. Because every situation is specific to each one of you, and you have to evaluate for yourself what is the best scenario. Because what I learned most about real estate is there are so many pathways to go. Sometimes it's hard to choose which one. Sometimes you're not educated to know what you don't know. And that's why you have to partner with experts, and that's why you have to meet as many people as you can to, be educated and to make the right decisions for yourselves.
Susan, I offered you to be unmuted. I don't know if you wanted to have to ask a follow-up question. Feel free to.
Oh, thank you. You friends have done everything for me. Thank you.
Thank you, Susan. Thanks a lot. I think we've covered all of the questions. Guys, this has been amazing. Thank you so much, Christine and Danny, and Matthew. Thank you for bringing in your friends. Amazing presentation. We really enjoyed. Folks, the presentation will be recorded and I'll share the recording with everyone. And please feel free to reach out to Christine and Danny afterwards. Bye, everyone. Take care.
Thank you so much.
Good night.
Good night,
Nice meeting
everyone.
you.